What's going on? Jake with Chain Genius back for another crypto daily update and jumping right into it today. The market is still terrible. Everyone's continuing to have a bad day. Bitcoin's down. It finally slipped way past 9,000. It looks like it might even breach below 8,000. $325 billion market cap. Ethereum dipped below 600 for the first time in quite a while. Cardano's down, Neo's down significantly, which has been proving to be pretty resilient the past couple of weeks, especially on the strength of some of their ICOs. Dash has slipped out of the top 10, which is surprising. NEM is even losing some of its bounce recovery that it had post-hack. It's just generally a bloody day. Tether's having a good day, holding steady right around $1. All joking aside, I think this has to do with the continued FUD and just lack of positivity that we're seeing in the space. Today, Google announced that they're going to stop ICO and crypto ads starting in June. They published a blog post today, or yesterday, I guess, stating that they're going to be adding restrictions, blacklisting ad content, including but not limited to initial coin offerings, cryptocurrency exchanges, cryptocurrency wallets, and cryptocurrency trading advice. This comes right on the heels of Facebook announcing a similar ban on crypto ads. And what's really concerning about this is between Google and Facebook's display network, that accounts for like 70% of the websites that you currently visit most of the time. The other thing is Google owns YouTube. And that last piece about cryptocurrency trading advice, the question is, does that touch on these types of channels where we talk about the market and we talk about some channels are doing technical analysis, drawing triangles on the graphs and looking at the tea leaves for inference into what's going to be happening. This channel where I talk about daily news, some of them like Ian Bellina are reviewing ICOs. While I don't think that's going to happen, it means it's not a huge stretch to envision that happening either. Unfortunately, we also will never get to see what the next Bitcoin is. We all know this ad and love it, and we've been seeing it for months. And I recommend, if you can still find this ad, now's the time to buy. Who knows what the next Bitcoin is? This man does. The other thing is Congress had another subcommittee meeting, and it was pretty much unsurprising that it saw U.S. lawmakers strike both supportive and critical tones on cryptocurrency. One called them a crock in an opening statement. Another one appeared at a blockchain event recently and said that it's a huge topic that cannot possibly be scratched even in 5 minutes. And then scrolling down to the bottom, there's another one, Representative Tom Emmer, who took a more contrarian view compared to the others. And he said, I find myself, maybe not with my colleagues on some of this, but I hear elected officials who don't have any concept of what we're doing here. We're just talking about going in and regulating. And I agree with that a little bit. I understand we do need regulation, and I agree with that statement or that idea. But the problem is, as I've touched on before, they're calling them securities, they're calling them money, they're calling them commodities. Everything is all-inclusive. They're trying to divide it up. They basically have no idea what they're doing. And I think this is relevant because it comes on the heels of John Oliver's recent piece this past Sunday, where he did an entire episode dedicated to blockchain, Bitcoin, and cryptocurrencies. And one particular project he called out was EOS, and mainly around the fact that they raised $1.5 billion and talked about Brock Pierce being an eccentric personality in the space. But what I do like is that the response to John Oliver was pretty well measured. They said that they agree with his tone when it comes to taking caution when you're investing, making sure you're doing research and only invest what you can afford to lose. But they asked that a little bit more background and due diligence is done during reporting, which I totally agree with as well, because EOS has come to be a project that I respect over the past couple of months. I agree, they don't need $1.5 billion. Ethereum managed to raise $18 million, and look at what they did with a much smaller amount of funding. But I thought it was just interesting that they took a very thoughtful response, and they even talked about how Brock Pierce was an early advisor, helped for several months, and that they've come to, while he's immensely valuable, they've come to a mutual agreement that he would end his role there, and they would continue being amicable and moving forward in the space. So that was just really positive, because they could have taken a much more emotional response. You saw this with a lot of the FUD claims against IOTA and their developer team where it turned into a poo flinging contest going back both sides across this instead of taking a more weighted and balanced approach. So I really like that. And I agree, a lot of this FUD and a lot of this regulation needs to come, it boils down to this is a hard technology. It crosses a lot of industries, economics, mathematics, cryptography, distributed ledger technology, computer science. You're crossing a massive number of fields to create this new technology. So it has a steep learning curve, and I just think I agree that it's going to take a lot of education. It's going to be a slow, drawn-out process as the market tries to recover. And I think we're not at the bottom of the market yet in terms of the dip. I think we've got a little bit more time, a little bit more pressure to deal with. I have no special crystal ball to validate whether I'm right or not, but all technologies go through this hype cycle where it goes from a trigger, inflated expectations, trough of disillusionment, slope of enlightenment, plateau of productivity. And with us now having the internet and social media, a lot of these cycles have increased their speed in which they go through these things. And I think that's what's happening. And I think crypto and blockchain in general is going to have more than one of these. They had one back in 2013 with Mt. Gox. I feel like we're in the midst of one now. And whether or not we have another is yet to be seen. But the reality is, Bitcoin got overcongested. It was overcongested. It was too expensive to use. It was inefficient. Not a lot of places continued accepting it. Ethereum got congested. A lot of these projects are still heavily centralized, whether that's through development, mining, ownership of coins. A lot of the hype is happening like the dot-com bubble where people are blockchainifying everything. My cat food doesn't need to be blockchained, for example. I don't think my cats care. So I think it's just going to be a long, slow recovery. Unfortunately, that sucks. I thought it was going to be faster and we were going to continue landing on the moon, making insane gains every month, but that's just the way it happened. The last thing I wanted to touch on is that even though the market's going down, Wall Street and traditional venture capital is already in this space. They're not hiding out on the sidelines. While they may not be investing in the traditional methods that we think of, like stock exchanges, there's a lot of these companies that have already put in skin in the game into the space since as early as 2015 with MasterCard, Visa, Stock Exchange, NASDAQ. And you can see this like Goldman Sachs funded Circle with a $50 million round back in 2015, which then Circle acquired Poloniex for $400 million recently. What else has been going on? There's another one, Axani, and Axani had backing from Wells Fargo, Citigroup, JP Morgan, Goldman Sachs again, Digital Assets, which was headed by, from my alma mater, JP Morgan, an executive, Blythe Masters. She raised more than $100 million from JP Morgan, Accenture, Citigroup, IBM. There was R3 Consortium, who raised it from over 100 financial institutions. Chain, another company building enterprise-grade blockchain, raised from Citi, Capital One, NASDAQ, Visa. Coinbase, which has raised more than $200 million from the New York Stock Exchange, BBVA, Bank of Tokyo, Mitsubishi. So I can go on where these companies like DCG, Digital Currency Group, which owns CoinDesk, led by Barry Silbert, raised from MasterCard, New York Life Insurance, CIBC. It just goes on. So even though the market's going down, don't think that Wall Street or traditional equities are sleeping on this space. They're going to continue building. They understand that the roads need to be built, the plumbing needs to be built, the infrastructure has to be built. This is still a young technology, and it will recover, in my personal opinion, over time. But we just have to go through these growing pains. That's all I'm going to cover today. Just wanted to do a quick touch on it. It gets kind of depressing when the market goes down month after month or week after week. So hopefully we can see at least a little bit of stability. And what I'm going to start doing is going a little bit more in depth into some of these other ICOs that are coming up, as well as some existing technologies, and kind of break down what they are and why they're valuable to the space overall, at least until the market begins recovering a little bit more. So if you like what I'm saying, it'd mean a lot if you hit that subscribe button, ring the bell, leave a couple comments, tell me any questions or concerns that you guys have, and until the next time, peace.